Hello everyone, welcome to my channel HD ORION. We are studying Accountancy for Partnership Firms from T.S. Grewal's textbook, Chapter 1, Accounting for Partnership Firms Fundamentals. And in this video, we will study preparation of partners' capital account by fixed capital method. So let us see some questions from the textbook. So in partnership accounts, there are two methods of maintaining partners capital account. First is fixed capital accounts method and second is fluctuating capital accounts method. In this video, we will focus on preparation of partners capital accounts by fixed capital account method. So when we are maintaining partners capital account by fixed capital method, then we have to maintain partners capital account and partners current account. So why do we maintain partners current account in this? That we will see. Let us discuss first partners capital account. In partners capital account, only the opening balance and the closing balance is shown. Mostly the opening balance and the closing balance is shown, and most of the time partners capital balances are credit balances. So opening balances is on the credit side and credit balances are obtained on the debit side as closing balance. Now there can be some drawings also. There are two types of drawings out of capital and drawings out of profit. So when it is drawings out of capital, it will be shown in the capital account itself, but drawings out of profit will be shown on the debit side of partner's current account, and some additional capital brought by the partner is shown on the credit side of partner's capital account. Only this much the partner's capital account has to show, whereas all the other details which the partners are receiving from the firm as per partnership deed by appropriation of profit, that will be shown in partner's current account. So it is compulsory to maintain partner's current account when the partner's capital account is maintained by fixed capital account method. In partner's current account, we are having opening balance. So most of the time there is a credit balance, so opening balance will be on the credit side, but some of the partners may also have a debit balance in current account, so it is shown on the debit side of it. And the rest of the appropriation of profit, which is brought from profit and loss appropriation account in the form of interest on capital, commission to partner, salary to partner, and then distributable profit, all these will be shown on the credit side of partner's current account, not in partner's capital account. Fine. Whereas on the debit side, what all amount reduces the current account will be shown on the debit side, like drawings and interest on drawings, or final distributable loss will also be shown here, and then the balancing closing balance will be obtained either on the debit side or on the credit side. Debit side is the credit balance and credit side is the debit balance. If it is there, then it will be shown here. So all the journal entries related to interest on capital, commission, salary and appropriation of final distributable profit will be from current account. Likewise, all the journal entries related to drawings and interest on drawings and distribution of loss will also be by opening partner's current account, not partner's capital account. This is a very important thing to understand and remember, because at times we students do not understand this and do not see the details in the question whether the capital account is fixed or fluctuating, and they pass correct journal entry but by opening wrong capital account. Either means they do not maintain current account. If they write capital account, then the answer is wrong. Fine. So let us focus on this and solve some questions from the textbook. So here question number 21. Amit and Sumit entered into partnership on 1st April 2022 and invested rupees 1,50,000 and rupees 2,50,000 respectively as capitals. The partnership deed provided for interest on capital at the rate of 10% per annum. It also provided that capital accounts shall be maintained following fixed capital account method. The firm earned a net profit of rupees 1 lakh for the year ended 31st March 2023. Passed the journal entry for interest on capital. Now in this question, because capital accounts is maintained in fixed method, therefore all the journal entries related to interest on capital and distribution of profit will be by opening partner's current account, not by opening partner's capital account. So let us see the solution. So solution 21st 2023 31st March. On this date we have to provide interest on capital to the partners. So interest on capital to the partners account debited. Account debited to partner Amit current account and to partner Sumit now their capitals are 1,50,000 and rupees 2,50,000. So 1,50,000's 10%. It is 15,000 rupees and 2,50,000's 10%. For the whole year we are providing it is 25,000. So in total it is 40,000. Being interest on capital. Now on the same date 31st March we will transfer this interest on capital to profit and loss appropriation account to the debit of it. So profit and loss appropriation account debited to interest on capital. Rupees 40,000. Being interest transferred. And now the distributable profit can also be distributed to the partners in current account. So by profit and loss appropriation account, by debiting it and transferring the remaining profits to partners current account. So Amit's current account and to Sumit's current account. So what was the profit earned during the year is rupees 1 lakh. Out of 1,40,000 is appropriated in the form of interest on capital. So remaining 60,000 need to be given to the partners, and as their profit sharing ratio is not given in the question, it is equal. So 60,000 divided into 2 equal halves is 30,000 each, being profit to partners in profit sharing ratio 1:1. Now let us see question number 22nd. Kamal and Kapil are partners sharing fixed capital of rupees 5 lakh each as on 31st March 2022. Kamal introduced further capital of rupees 1 lakh on 1st October 2022, whereas Kapil withdrew rupees 1 lakh on 1st October 2022 out of capital. Interest on capital is to be allowed at the rate of 10% per annum. The firm earned net profit of rupees 6 lakh for the year ended 31st March 2023. Pass the journal entry for interest on capital and prepare profit and loss appropriation account. Now in this question, there is drawings, but these drawings are out of capital, and therefore out of capital drawings are shown in capital accounts, never in partner's current account. If out of capital word was not here in the question, then it was considered as drawings out of profit, which is to be shown in partner's current account. So let us see the solution for this. Before passing journal entries, let us calculate interest on capital for both the partners. So let us calculate interest. Interest on capitals. Let us calculate it for partner Kamal first. So on 1/4/2022, he had capital of rupees 5 lakh. And on 1st October 2022, he introduced further capital of rupees 1 lakh. So 5 lakh plus 1 lakh, now the capital is 6 lakh. There was a change in capital, and therefore this 5 lakh remained in the business till 30th September 22. And here on from 1st of October 22 till 31st of March 2023, the capital was 6 lakh. So for different amounts of capital, we have to calculate interest at the rate of recommended rate of interest, that is 10%. So it is for how many months? 6 months. From 1st April to 30th September is 6 months, and therefore amount is 25,000 rupees. And here also there is 6 months, from 1st of October to 31st of March. So at the same rate, but for the remaining 6 months, and it is 30,000 rupees. So total interest is 55,000 rupees for the partner Kamal. Now let us prepare this for the partner Kapil. Here also from 1st of April 2022, his initial capital was rupees 5 lakh, but from 1st October 2022, he withdrew 1 lakh rupees. As a result, his capital dropped to rupees 4 lakh. So from 1st of April to 1st of October means from 30th of September 22, the capital was 5 lakh rupees. And from 1st of October onwards till 31st of March 2023, the capital is 4 lakh. Now the same percentage we have to provide for 6 months, because this period is 6 months, and on 4 lakh also for the remaining 6 months. So here it is 25,000, and for on 4 lakh at the rate of 10% for 6 months is 20,000. So his interest on capital is 45,000. Now taking these figures, we have to pass journal entries for interest on capital. So on 2023, 31st of March, that is the last day of the accounting year, interest on capitals account debited to partner Kamal current account, because capital accounts are kept fixed, and to Kapil's current account. As we have calculated 55,000 for the first partner and 45,000 for the second partner, so it is 1 lakh rupees. Being interest on capitals to partners. Now on the same date, we will transfer this to profit and loss appropriation account. And close interest on capital account. Then on the same date, remaining profit will be paid to the partners. So profit and loss appropriation account. What is the remaining profit? Out of 6 lakh, 1 lakh rupees has been distributed in the form of interest on capital. So remaining 5 lakh will be given to the partners by crediting their current account. So to partner Kamal, current account, and to partner Kapil, current account. And their profit sharing ratio is not given in the question, so it has to be equal. So 5 lakh in 2 equal halves is 2,50,000 being profit transferred. Now we also have to prepare profit and loss appropriation account. So let us prepare profit and loss appropriation account. So in profit and loss appropriation account, on the credit side, we will transfer net profit. Net profit is always a credit balance and it is 6 lakh. And we have apportioned it in the form of interest on capitals. For partner Kamal and Kapil, the amount is 55,000 for the first partner and 45,000 for the second partner. So out of 6 lakh, 1 lakh is paid in the form of interest on capital, and the final divisible profit will be given to the partners in profit sharing ratio. So it is 6 lakh rupees in total. 6 lakh minus 1 lakh is 5 lakh, which is given to the partners in their profit sharing ratio, which is 1:1. So this is the solution. Now let us see question number 23. Simran and Rima are partners sharing profits in the ratio of 3:2. Their capitals as on 1st April 2022 were rupees 2 lakh each, whereas current account had balances of rupees 50,000 and rupees 25,000 respectively. Interest on capital is to be allowed at the rate of 5% per annum. Net profit of the firm for the year ended 31st March 2023 was rupees 3 lakh. Pass the journal entries for interest on capital and distribution of profit. Also prepare profit and loss appropriation account for the year. So this question is same as question number 22 and calculations are simpler than the previous question. Let us see the solution. Solution 23. On 31st of March, we have to pay interest on capital to partners Simran and Rima. Interest on capitals account debited to Simran. Simran's current account, because capital account is fixed, and to Rima. And their capitals are rupees 2 lakh each. So 2 lakh and the rate of interest is 5%. So on 2 lakh, 5% for the whole year, it is 10,000 rupees each. So out of the total profit earned, 20,000 rupees is distributed to the partners as interest on capital. Now it will be transferred on the same date. It will be transferred to profit and loss appropriation account. And interest on capital account will be closed. So 20,000, it will close by 20,000 here, being transferred to profit and loss account. Now the remaining profit will be paid to the partners in their profit sharing ratio. So on 31st March again, profit and loss appropriation account debited to Simran current account and to Rima's current account. So what is the remaining? Out of 3,20,000 has been given as interest on capital. So remaining 2,80,000 will be paid to the partners in their profit sharing ratio, which is 3:2. When you break this 2,80,000 in 3:2, the first partner will get rupees 1,68,000 and the other partner rupees 1,12,000. So being divisible profit paid to partners in their profit sharing ratio. Now we have to prepare profit and loss appropriation account. So on 31st of March, our net profit is rupees 3 lakh. Now to interest on capital. To partner Simran and Rima. As discussed earlier, it is 10,000 each. So 20,000 as interest on capital, and then the remaining distributable profit or divisible profit in their profit sharing ratio, which is 3:2. So out of 3 lakh, 20,000 we will subtract, and divisible profit is rupees 2,80,000 for Simran and Rima. So it is 1,68,000 for the first partner and rupees 1,12,000 for the second partner. So this is how the profit and loss appropriation account is to be prepared. I hope that you have watched the full video and got the concept right. If you are still having any problem, any doubt, then please put it in the comment section. Please do like it, subscribe it and share it with your friends. Thank you so much for watching this video.